going to talk to you about cybersecurity investment trends. Specifically, I'm going to talk about threat landscape we've observed in 2020 and how that is evolving in 2021. Then we'll go over investment trends, venture capital, M&A, and IPO activity from last year. Then I'm going to talk about some trends we are observing for this year. And then I'll briefly touch upon three topics that are of growing interest: supply chain security, data security, and cloud security. Cybercrime costed the world almost $1 trillion in 2020. If you break down the cost, it includes both direct costs associated with incident response, restoration, and recovery, as well as indirect costs due to lost business, reduced efficiency, brand damage, and loss of trust, IP theft, and damage to employee morale. If we look at the data breaches from 2020, not a single month has passed without reading a headline news item about a company reporting a data breach. It started off with Microsoft reporting a data breach due to a misconfigured internal customer database that leaked about 250 million records. And in February, MGM Grand reported of a data breach affecting 10.6 million hotel guests, including some of high-profile guests. In March 2020, Marriott reported of a data breach involving 5.2 million hotel guest records that have used its loyalty application. And in April, as we all started to use Zoom more widely, cyber criminals launched a series of credential stuffing attacks on Zoom and stole 500,000 accounts. In July, Twitter suffered a data breach due to a spear phishing attack, where cyber criminals got access to Twitter's internal systems and they took over 130 high-profile accounts, some of those belonging to Obama, Joe Biden, Bill Gates, Elon Musk, and they tweeted out of those accounts asking for Bitcoin. In October, India's largest online grocery retail store, Big Basket, suffered a data breach and it exposed records of users. Up to 20 million records have been exposed. And finally, in December, we saw FireEye reporting that it suffered a highly sophisticated attack from a nation state with top-tier offensive capabilities. They stole their red team assessment tools. And looking at all of this, what you can observe is, regardless of whether you are a large technology giant or a fast-growing company, or a cybersecurity company, you need to improve your cybersecurity posture. You can't let your guard down, and you need to be faster at detecting and responding to these attacks. If we look at the data breaches on a year-over-year trend line, 2020 saw a decrease compared to 2019 levels. So we have about 1,108 data breaches reported compared to 1,362 from 2019, and the number of individuals affected significantly dropped from 900 million to 300 million. This does not mean that cyber crime has decreased. What it means is cyber criminals have gotten better. They got business savvy and they found a lucrative business model. So they understood that targeting, doing mass data breaches and targeting and doing identity theft over multiple months is a slow revenue business. They figured out how to do targeted phishing and ransomware attacks, which is paying them well. So one ransomware attack can generate as much revenue in minutes as hundreds of individual identity theft attempts over months or years. And if you look at the average cost to remediate a ransomware attack, you will find it interesting to see that those firms that have paid the ransom incurred double the cost compared to those that didn't pay the ransom. The reason is because when you pay the ransom, you still have the cost associated with getting the data, making sure it is all good, and restoring and recovery. So you have two costs associated. That's why your average cost is high. When we take a look at the cost of data breach study from IBM, we see that the average cost of a data breach in 2020 was reported at 3.86 million. So you may say that, hey, this average cost is flattening here. What is about it? And but if you read more, if you look at it and read the report more closely, what you're finding is a clear distinction between firms that are more mature in the cybersecurity program and those that are less mature. So the more mature ones are able to contain the cost, limit the cost, whereas the ones that are still lagging in cybersecurity maturity, they are incurring a very high cost. So the average number is a little bit misleading. The average time to identify and contain is still hovering at 280 days. Again, there will be a distinction between the leading firms and the lagging ones. It's good to see security automation growing at organizations. 59% of organizations reported that they have deployed some form of security automation. And the average cost of a data breach is highest in healthcare, and it has been consistent. And if you break down the cost of the data breach, it includes 4 components. The largest one is, of course, lost business cost. Then we have detection and escalation cost, followed by ex-post response, and then finally notification cost. An average time to identify and contain a data breach by industry, if you look at it, healthcare is taking the longest amount of time to detect and contain. The number of days average reported at 329, whereas the financial services industry is doing a good job, where the numbers is lower, 233. I don't think they are still better, but this is progress, and we just see the ranking. I think we still have a long way to improve this detection and response rates. IBM also studied 25 key factors that affect the cost of a data breach. It ranked things like if your firm has an incident response team and you are doing regular pen testing exercises, you will see your average cost decreasing. Whereas if you have a complex security system, or if you're doing cloud migration, or if you have a lot of connected devices, then you will increase the cost of a data breach. So that's what attackers are doing, and in response to that and to counter that, organizations are heavily spending on security. The worldwide security spending slowed a little bit last year because of the pandemic, but it is projected to bounce back this year. The market is estimated at $125 billion, out of which security services comprises almost 50% of it, which is your MSSP, consulting, implementation, and those kind of services. The second one comes in at 15 billion, which is infrastructure protection, which includes things like your XDR, secure web gateways, SIMs, and threat intel tools, followed by network security equipment, and then identity and access management. So the industry is projected to grow significantly, and the secular tailwinds underpinning the cybersecurity market remain favorable. Organizations have realized that it is a key business risk. It impacts business continuity. It is no longer a discretionary item. It's a must-have, not a nice-to-have. We are also seeing a significant increase in the number of attacks and the sophistication of attacks. There are growing number of regulatory drivers, GDPR, CCPA, and regulation from several other countries, which is also pushing increasing demand for new solutions. Then the industry as a whole is faced with a shortage of skilled workforce, and there are millions of unfilled positions, which means that the industry needs to be innovative. It needs to leverage technology to automate a lot of data analysis and detection and response. So it's a good thing that we are using a lot of ML and AI, but it's also a bad thing because the bad guys are also using ML and AI to automate the attacks. So the battle between offenders and defenders is going to continue to increase in sophistication. And investors like the fact that because it's such a rapidly growing market and there are good exit multiples and good returns, they are continuing to invest in this market. When we look at how much was invested, the venture capitalists poured in $10.7 billion across 539 transactions, which is a 20% uptick from 2019 levels. It's a nice, so this is in the backdrop of a pandemic. So we didn't experience a slowdown, and instead we have touched record levels. There was a little bit of slowdown in April-May timeframe because Q1 didn't get affected because a lot of deals that closed in Q1 were already started in Q4 of 2019 probably, and then Q2 we saw a slight slowdown, but then things bounced back again. And take that 10.7 billion number, and if you contrast it to the global invested dollars in venture capital, venture VCs have poured in 259 billion across 16,773 transactions. So if you Compare that with the 10.7 billion, it's just 4% of it. So it's a small, tiny drop in the bucket of venture capital investments. So, and there is a long room, and there's a big, and there's a long way to grow. Now let's look at deal activity by segment. If you look at this, you see that risk and compliance segment has had the most activity with 95 deals. These include things like GRC, visibility, vulnerability assessments, pen test, breach simulation, security ratings, and so on. Then the second category is a segment that had the most deal activity is data security at 69 deals. This includes things like data privacy, DLP encryption, then followed by network and infrastructure security, which is your firewalls and IPSs, then SecOps, IR, threat intel, and so on. So a total of 539 transactions happened last year. Now, if you take that same and compare it with the amount invested in each of these segments, actually you'll see a different picture here. Data security with 69 deals attracted the most amount of capital at $1.73 billion. Then we have cloud security, which got $1.3 billion. And risk and compliance, even though it had the most amount of deal activity, the total amount invested in that category is at 1.15 billion. And here are names of some companies within the bar chart. You can see that fell into those categories. Another interesting fact is we're also seeing an increasing number of cybersecurity unicorns. This speaks to the interest in the category from investors. Not only cybersecurity specialty investors, but also other investors are coming into this sector and pouring money in and investing in this. If you look at deal activity across the United States, we have California and New York doing the most amount of deals, and their numbers, their position, their ranks have stayed the same compared to 2019. But the rest of the rankings, there was a little bit of a shuffle. We see states like Texas move up the charts with more deal activity. We also see some new states like Utah having cybersecurity companies. So I think this trend will continue, wherein we will see company formation, not just in the hotbeds, but also in other regions. With all the distributed workforce now that people have gotten used to, I think forming a company anywhere and attracting talent will be a little easier. Now, if we deep dive and look at number of deals by stages of company and the amounts invested across these stages, seed, Series A, Series B, and Series C, we see that late stage companies, there was a significant increase in deal activity. So Series C plus companies have seen that there is a 43% increase in the number of deals for late stage companies. And the next big increase we saw was in early stage investments. And then finally Series B stage companies experienced just a slight uptick. Now, when we look at the amounts invested across these stages, obviously investors tend to love more mature companies and they want to put in more capital behind leading companies. So Series B, C, and beyond companies attract 80% of the investment dollars, and early stage and Series A make up the rest of the 20%. So what we observe here is a lot of Series B stage companies were able to raise money last year. So we saw that uptake, 78% increase in the amount that these companies were able to raise. It could be because investors are now trying to uncover the next unicorns, or they are trying to find the next big winners here and deploying more capital into innovative Series B stage companies. Then we saw that Series C, even though the amounts are higher, I think the jumps have slowed down a little bit. So they are not plowing in all the money into Series C and beyond companies. Now, from an M&A deal activity standpoint, last year we observed 178 transactions across the cybersecurity, totaling $20 billion. And here are some of the prominent companies that were able to exit. So Forescout, there is also an increased activity from private equity players. Companies like Forescout, ForcePoint, Armis, RSA were all acquired by private equity players who are trying to consolidate and come out with a comprehensive platform solution. And then from a valuation standpoint, we saw that the median multiple, revenue multiple paid is hovering at 4.9x, and it's staying flat at that level. And then again, please use this with a grain of caution, grain of salt, because this is median number. Different companies across the gamut, some may attract very high multiples depending on their growth rates. If we look at public company performance, last year was a stellar year for the entire stock market, and cybersecurity is not an exception. So the cybersecurity companies have performed really well, and we saw the median multiple increase 30% from 7x to 9x, and a lot of companies have increased their multiples on enterprise value, revenue multiples. Now, if we look at the IPO activity, last year 3 companies went public: Sumo Logic, McAfee, and Telos. And the median at IPO, the multiple across all of these funds in 2012, if you look at it, it is at 7.3. And let's see how these companies have fared post IPO. I plotted a chart up until April 12th, and what we see here is Telos and McAfee have performed really well, and not so great with Sumo Logic. This is a nice chart which shows deal activity, transaction activity for 22 years, for the past 22 years, since beginning in 99. And the shading and the boxes show the dotted lines show the areas or the periods when we experienced a recession. So what we see here is that during a recession, M&A volume slows down, deal activity comes down, and post a recession and during the recovery, it bounces back up. But interestingly, we didn't. I will go over this one, but we didn't see the same. We didn't see such a significant slowdown here, because if you look at the venture investments, they continue to trend upwards. And again, deal activity is also in line, except for one anomaly here in 2019, which was the Symantec acquisition by Broadcom, which totals 11.1 billion. If you exclude that, I think the trend line is in the right direction. Now let's switching gears a little bit and talking about what trends we are seeing. So if you look at the broader InfoSec market, the challenges that we are seeing are still the same. There is an ever-increasing attack surface with the rise of distributed workforce, connected devices, cloud apps, and data in different locations. So that is not slowing down at all. Then we are also seeing an increase in sophisticated attacks and advanced threats. We have talked about the shortage of skilled workforce in this sector. And last year, we've seen companies accelerating their digital transformation efforts, migrating to the cloud, using new technologies such as container serverless. All of this increases the likelihood of an attack because of the nascency of the space and the maturity curve. And then what we also see is an overinvestment in prevention technologies or pre-breach prevention technologies, versus investments in post-breach detection, response, and recovery. So this is a 5x5 matrix called the Cyber Defense Matrix. I talked about it last year as well. What this shows is the assets that we want to protect: devices, applications, networks, data, and users. And then overlaid on top are the 5 functions of security as defined by NIST: identify, protect, detect, respond, and recover. And at the bottom, you see that where technology plays a greater role and where people play a bigger role. And if you put the solutions that you're familiar with in these boxes, you see that identify and protect categories are pretty full, or almost to the point of overcrowding, whereas you see a sparser matrix in detect, respond, and recover categories. And so it's very important that we think about these post-breach capabilities, because as we have seen, regardless of how big an organization you are or whether you're a technology giant or not, you can still be breached. And it's very important that you detect an intrusion or a malware or a malicious actor quickly, and you respond and recover and you contain that attack. So focus on this will be very important. And that's what a study by Accenture found. They've surveyed 4,644 executives at companies with greater than $1 billion in revenue, and they've been able to separate organizations that have a more mature cybersecurity program, who are leading in their efforts towards cybersecurity, and those that are lagging or playing catch up. So what they noticed is the leading organizations are using KPIs such as detection speed, recovery and restoration time, and response time as key metrics for the cybersecurity programs. So which is important, right? It's not all about how many attacks you have stopped, but it's also about how quickly were you able to identify and contain the attack. Now I wanted to briefly touch upon 3 topics that are of growing interest. The first one is supply chain security. When we look at any modern application, 90% of the components used in a modern application comprises of open source components, out of which 11% carry some vulnerability, some form of vulnerability. And if organizations are not visible to that or not taking that into consideration and making sure they are doing appropriate scanning and patching, they will be susceptible to an attack. The high-profile case we noticed in this category was, Equifax got breached because of an open-source vulnerability in Apache Struts component, which they haven't patched. So it's almost like an iceberg, where the tip of the iceberg is where the firm is working on its own proprietary code, but it is leveraging so many open-source components and third-party code. And if you do not consider attack vectors and you don't plan for it and do sanity checks on this, you will be subject to an attack. And let's take a connected device as an example. It could be a security camera or an industrial IoT device or an autonomous car. What it has is embedded software, and that embedded software comprises of drivers, operating system like Linux, Android, RTOS, or other variants, and then there are libraries and apps all put together sourced from different vendors in the supply chain, right? The device maker, the hardware manufacturer, takes this code, puts it into the device, and ships it out, and customers get this device. Now, they are not checking for whether the firmware had any hard-coded credentials or backdoor entries or vulnerabilities or any unsafe function calls or any memory corruptions. None of this is being studied in great detail, and consumers are unaware of all of this. And so what we need to do as an industry is ask for software bill of materials. We need to start analyzing these firmware in connected devices, because they are so ubiquitous, and as you know, cybersecurity is as good as your weakest link. So if you are bringing on all these weak devices, then regardless of how much investments you make in a security technology, will still be breached through these attack vectors. And one of the recent high-profile case studies we witnessed is that of SolarWinds, where attackers were able to inject malware into the SolarWinds software development process. As you know, SolarWinds is a leading provider of network performance monitoring tools used by many Fortune 500 firms and federal government agencies. And what attackers did was introduced a malware, and then that enabled a backdoor in the Orion IT management product. And so when SolarWinds shipped out an update, all of the customers downloaded it, and attackers were able to penetrate the customer's organization. And attackers managed to do all of this very stealthily. They were undetected by any security tools that SolarWinds was using. They also made sure that the builds weren't failing. They took a lot of measures in trying to clear up their tracks and hide their tracks. And so this is a very sophisticated attack. And if you look at the timeline, the attack originally started in September 2019, and it is only in December 2020, after a year, FireEye detected it and notified SolarWinds about this issue. So it's very important. Supply chain, third-party vendor risk, it's very important to understand that. Then the next topic I want to talk about is data security. As we all know, organizations are generating a lot of data, collecting a lot of data, and storing it in on-prem, storing it in SaaS applications, and then storing it in cloud platforms. So they need a way to scan all of this data and inventory. The first thing is to know what data an organization is collecting and identifying what it is. Then the next step comes where it needs to catalog and address any governance issue, meaning where is this data coming from, where is it being stored, who has access to it. And then comes the next step is privacy workflow and operations. Because of the growing regulations, any customer can come and ask a company like, hey, tell me all of the data that you collected, or please delete data that you've collected on me. Then the organization must be able to address it efficiently. So data subject access request or other regulatory inquiries, there needs to be tools to manage that one. Then after that, then companies need to look at consent management. Are they taking appropriate permissions from customers to use their data, right? How do you manage that? Then finally, after you do all of that, you need to protect the data and use it for analytics purpose to unlock value. And you need to also do because with de-identification, anonymization, pseudonymization, and then encryption. So there are tools emerging in that space. So what we see is, because of the nascency of the space, we are seeing solutions being developed to address each of these pain points. But as category matures, we will see more consolidation and then platform players emerging out of it. We all know about GDPR. It could levy fines up to $20 million or 4% of the worldwide annual revenue, and a lot of European Union countries have been issuing fines. And we see that the top 5 biggest fines have been issued. The first one is to Google, 50 million euros, then H&M, then followed by TIM, the Italian telecom provider, then British Airways and Marriott International. So it's very real. Fines are continuing to be issued, so organizations need to take privacy, consumer privacy more seriously. The other component, the other pain point with the data is, how can you enable more, how can you unlock more value out of the data that you have? We are very good at protecting the data that we have stored, which by doing encryption, we are also able to encrypt data in transit. But what about encrypting the data while it is being used by analytics applications or third-party tools? If you are able to do that, then we can generate, then we can identify many more monetizing streams, as well as unlock more value. So if you take an example, let's say anti-money laundering use case, where if you want to get data from a bank, a credit card issuer, and a mortgage processor, they may not be willing to openly share their data. But with this technology called homomorphic encryption, or any other newer, better way of encryption, if you can guarantee that the data won't be exposed, and you will run the analytics algorithm on all of this data, so everyone is sharing their data, and then you use your algorithm, which is also encrypted on this data, and then the training data, because of the availability of large training data, you will be able to generate a better model, and using that better model, you will be able to detect AML fraud much more effectively, meaning the accuracy will be that much higher. So this is one of the use cases for using encryption and enabling analytics to be run on encrypted data. The final subtopic segment I wanted to talk about is cloud security. As we all seen, organizations are moving to the cloud, and cloud usage is increasing. A recent study by Cloud Security Alliance showed that more than 50% of organizations they've surveyed are putting workloads in the cloud, and that percentage is only going to increase. If you look at the market share of public cloud companies, we see that both Amazon and Azure have almost a similar market share at 65%, and then followed by Google, and then the other small cloud vendors. It's all interesting to note that almost a third of organizations are using more than 3 clouds. So hybrid clouds, multi-cloud environment is essential, and a strategy to leverage that will become more important. Usage of cloud apps in the enterprise is also continuing to rise. If you look at the web traffic, more than 50% is cloud related, and the top 5 cloud challenges are the number 1 is security. So and then followed by managing how much amount of spend is going to cloud, governance, and then there is a problem with skills in the workforce, how to manage these new technologies, how to make sure there is enough protection around all the data and the application that you are putting in the cloud, and then finally compliance with regulations. So these are the top 5 challenges customers are reporting with cloud adoption. And if you look at the data breach root causes by threat vector, you see that cloud misconfiguration is the #1 vector through which more breaches are happening. So this points out that security is the #1 issue that is creating a drag on more cloud adoption. And the high-profile example in this case is showing that is Capital One data breach, where the attacker took advantage of a misconfigured web application firewall through which he was able to do server-side request forgery and getting data from non-public databases and then exfiltrating the customer data. So 106 million customer records have been stolen through this attack method. And recently, last year, Pfizer also suffered a data breach because of a misconfigured Google Cloud Storage bucket. So it's just that we are moving to the cloud at such a rapid pace, and then the skill set is not there. The tools that are needed for creating good visibility are also not there. So there are some errors going on, which the industry will address it, but this is something that will continue to happen even this year. And cloud platform vendors have said that cloud security is a shared responsibility model. If customers want more control of the cloud infrastructure, then they have to take care of more items in the cloud security stack. And if you are just running the SaaS application, then you will be responsible for that portion only, users and data. So cloud security doesn't just mean about technology, it also means controls, processes, and policies which combine to protect your cloud-based systems, cloud workloads, and data. So with that, I'll open up to Q&A. Thank you.